This is Brian Nagel, senior analyst at Oppenheimer and Company. A lot of times, Brian, when we talk tariffs, it's about the future. Anything in this report about tariffs?
What I thought was really interesting is I looked closely at Home Depot's report. If I'm reading this correctly, they're not saying that tariffs are having an impact on their business. What they're saying is they're worried that tariffs could have an impact on the consumer.
Although I think that's accurate, but aren't the lower lumber prices the result of tariffs coming off, old tariffs coming off? Didn't lumber prices go up because
dollar
of the
or what? I mean,
I don't really know. I don't really know. We've been talking about lumber prices being a problem for Home Depot and Lowe's for a while. I don't know how tariff related that is.
Why did lumber prices go up? I thought it was because we were fighting with Canada.
I don't know. I thought it was more of. I really thought it was just more of a demand type issue. But I don't know. But the issue with lumber prices, and I think this is interesting in this report today too. The one thing I want to say is, there's going to be a lot of talk today about Home Depot cutting its guidance. The real key, as I look at this, is this has been very, very well telegraphed. I put a piece out last week expecting this. Other people have done the same thing. For the home improvement chains, lumber prices are a pass-through. So they basically pass to their customers whatever price they have. So what's happening here is lumber prices have come down. That's actually a negative for sales.
Look, I understand why that hurts sales. Why would that hurt any earnings potential?
Well, it really doesn't. That's an interesting point. So if you look at the guide, and this is really getting the weeds here, but if you look what Home Depot said about guidance for this year, they took comp guidance from 5 down to 4, but they maintained their earnings guidance. So really,
but they maintained their earnings guidance, but it was a little lower than the official street number expectation. Was it just, what was the difference? It was off by a few cents.
Yep.
But with what the generalized, so maybe the street was just a little higher on that end. It doesn't sound like they're saying anything all that disappointing, but maybe the street just got a little ahead of itself.
That's exactly right. So I'm looking at the street right now is 10.11.
I think they said
they're guiding to 10.03.
Yeah.
The streets is basically modeling ahead of earnings or the guidance. I look at the change. The key is they did not change earnings.
You don't think there's any bad news, but really?
I'm sorry.
You don't think it's really bad news, anything that they've said here?
No, I think it's, if we heard this report 3 months ago, then it would be bad. But relative to market expectations, this is very much in line. Now, the key, when the Home Depot will have its conference call here shortly, what we'll all want to see is some indication of acceleration in sales trends through the quarter, which it seems, given the tone of the release, that probably happened. Because the other factor beyond lumber prices is weather. We had once again, a late start to spring. The month of May was quite wet and cold. We're assuming that Home Depot's business improved as the quarter progressed, and you had a better exit rate.
So the full year same-store forecast is higher than this most recent quarter, right? Is it because just seasonally other quarters are you expect better comps? I don't. Was this a disappointment or not a disappointment? Why was it 3% or 3.1% versus a yearly forecast of 4%? Do they have to make that up? Are they optimistic? What's the discrepancy?
The easy answer is the comparisons were more difficult in the first half of the year than the second half of the year. So you're right. To make it, there is a way they have to make it up. But the way we look at this, when you start stacking this all up, they actually have an easier sales comparison in the second half of the year. So it should be easier for them to get something north of a 3% comp to get to that 4.
So it's not far from an all-time high, but it's off a little bit. You expect it to continue year in and year out to grow in market cap. You're not expecting a flat period for 2, 3, 4 years. You'd buy Home Depot.
That's right. Look, I think the one factor here that we've all been discussing, I know in the prior segment we were talking about the yield curve. So there's this potential inversion, or the inversion of the yield curve has caused a lot of stir in the market. For Home Depot, the big positive here is mortgage rates have come down dramatically. As I think about the back half of this year, that should really be a positive for Home Depot in the home category broadly.
That's interesting.
Well, I just saw that the actual revenue number, they rounded down on the one that we saw first, the 39.8. It really wasn't that far from the 39.8 that we saw. The stock's up sharply now. It's up $2.55. Brian Nagel, thank you.
Thank you.